Hey, what's going on everybody? LandVest here, back again with another YouTube video. This video I'm going to be teaching you all how I utilize candle equilibriums in order to take trade entries and trade continuations. And the reason why I feel like this is a very important video is I often get questions of you all asking how you can enter a trade if you miss the original candle to unicorn or the T-Trade's fractal model change in state of delivery entry. So this video is going out to all of you out there that want to find a higher probability way to catch continuations on trades by utilizing higher time frame equilibriums. And so getting right into it here, I'm going to be recapping a trade that I took on July 1st, 2025, as I feel like this was an A+ example towards this continuation since I had missed the original fractal model entry. So let's break it down on the higher time frame. What did I see on the 1 hour time frame here on NASDAQ? Well, from previous day with Monday's market, what did we see happen with this Monday market? Well, we had honestly quite a bit of a chop fest where we were bouncing between this range, no super clear price action except for these shorts that had played out at around 8 a.m. But during this New York open up until this New York PM session, we didn't really have any crazy direction as market kept rejecting off of these lows around 22,795. So I had entered a long position yesterday, ended up selling out for about $120 loss since I just was not comfortable holding the trade any longer and was in it for a few hours and ranging between being in the money by a couple points and then out the money by, down anywhere from 10 to 15 points before I decided to take a $120 loss. So let's look into now Tuesday market and what gave me this bearish bias to enter into this position. Well, as we see up here, what did we create up at these highs? Well, we kind of had this supply that was formed up here as well as these draws on liquidity. Every time market decided to retest this Monday market high, what was Monday doing? Well, Monday from this 4 o'clock high, this 5 o'clock high, retested at 3 o'clock, rejected, formed a bearish signature, retested once again during this Asia session high. And what did we see happen once again? Well, we saw yet again another rejection off of that draw on liquidity or that high interest liquidity zone where Asia once again tapped that and created a rejection lower. And so here would have been a great area to look for an original short position because we saw this very aggressive hourly closure which engulfed the previous two hourlies, the 8 o'clock and the 9 o'clock, were engulfed by that 10 p.m. hourly candlestick, which gives a very bearish signature as it starts to break us out of this bullish market structure that we saw forming from this 2 o'clock candle up until this 9 p.m. candlestick. So once I see this bearish bias forming on Asia, what happened with London? Well, London had a little less aggressive of a phase where London actually ended up accumulating on the hourly time frame that you guys can see here. Right? If we look at London, what exactly was happening? Well, we were bouncing between the internal range of yesterday's New York PM session lows and highs, as well as this Asia session. We just weren't creating any aggressive move. And so London was accumulating quite a bit. So what did that leave me to come up with in terms of bias for the New York AM session? Well, pre-New York AM and New York AM session, I was wanting to see a fill of these draws on liquidity and these higher time frame liquidity interest areas at these lows. Because as I mentioned here, we had filled that draw on liquidity from these Monday highs, rejected off of it. And so now if I want to look for areas of high interest liquidity, I want to look for areas where lows were pooling or where these liquidity traps might lie. And so down here at these lows right here was a first area of high interest liquidity that I was looking for. Also, another notable thing that I had noticed on the higher time frame was this 1 hour breaker block that had formed from this 9 a.m. candlestick on Friday. And so here was a breaker that had not gotten tested yet during the new week since this Sunday market opened. And so this was another high interest area of liquidity that I was watching for these short entries. And so now this is just my general bearish bias. And so when I was looking at Tuesday's market, the biggest thing I wanted to see was to see some type of pull towards these Monday New York PM session lows, as well as potentially filling some type of liquidity at this 1 hour breaker block that had formed from that 9 a.m. candle on Friday. So that's kind of how I got my general bias for the bearish market today, looking into these shorts. And originally as well, I wanted to see liquidity be swept down at these lows in this breaker block before finally looking for a long entry back into these London highs and potentially Asia highs. So let's go on the 5-minute time frame now to utilize where I actually took my entry signature into this short position. Because once again, when I'm looking at analysis on the hourly, what is the aligning time frame with the hourly? Well, it is the 5-minute time frame. And so let's see what happens here now on this 5-minute time frame. Here we have marked out my London highs, my London lows, as well as my Monday New York PM session lows. And so what did we see happen here with NASDAQ on this 5-minute time frame? Well, this is what was happening. Here we see, first of all, London had a very small accumulation and a very non-aggressive bearish trend lower, and then finally formed this 5:50 a.m. low here, which was the base, the London low session, which I have marked here. And so what I was looking for was to see a potential short signature to retest those London lows around here. And so if we look at the general fractal model entry, let's look at this for what we see. We have the 6 a.m. candle, and if we look at the 6 a.m. candle, this actually formed the 6 a.m. candlestick high on the 5-minute time frame. So I'll have this marked out here, and I'll mark this as our 6 a.m. high. Okay, so this is our 6 a.m. high because this is where market ended up seeing the hourly candle form. And then what do we see happen around here? Well, the 7 o'clock opens, and the 7 o'clock actually sweeps the 6 a.m. high, which creates a C2 signature sweep, which with the fractal model can be an indication of a potential reversal signature. Because if we now sweep a previous hourly high, what does this 2 candle body up closure form? It forms a change in state of delivery, right? So this now becomes our bearish change in state of delivery, where we want to see a potential short signature form off of once we see a candle body closure below this change in state of delivery. And I'm going to turn on the fractal model so you guys can see the higher time frame on the right here to make it easier to understand. So here we have the 5-minute candles, and here we have the hourly candlesticks to my right. So what do we see happen here? Change in state of delivery forms, and so per the fractal model entry model, when we want to look for an entry signature, we want to see a candle body closure below a change in state of delivery. And because this is a bearish example, we want to see a bearish candle body closure below. And so with an original fractal model entry, you would enter on the closure of this change in state with your stop at the high of the change in state, and then you would target a 2-to-1 risk to reward ratio, which aligns pretty well here with this hourly breaker block that had formed down at those lows, almost perfectly, right? But I actually missed the original change in state of delivery entry, so let's talk about where I actually took my entry. Because here we had the fractal model form, but we had this very, very, very handy tool called a breaker block that had formed as well. And so this 5-minute candlestick actually became a breaker block here as well. So I'll mark that out here on my chart, and we will now map this out as a BB. And this is a bearish breaker block that had formed too. So we have 2 confluences now that are aligning for the bearish direction. We have a sweep of the 6 a.m. high with the 7 o'clock candlestick high. We also have a closure below a bearish change in state of delivery, as well as a bearish breaker block. And so once we see this closure below, this forms a candle to unicorn short into this short setup with NASDAQ. So I did not enter on the original close because I was anticipating a retest of the previous candle equilibrium, as well as the breaker block and change in state of delivery. And so here, as we see on the fractal model in this dotted line becomes our equilibrium from the previous hour. So the 7 o'clock up until the 8 o'clock. So this full hourly candle, this maps out the equilibrium of that move. And so what I looked for here was to see whether or not we would retest and respect the breaker block and this candle equilibrium, which is exactly what we see happen here. And so with this candlestick, my entry was taken, if I remember correctly, it was taken just at around 22,825, which I will now mark out in the short position setup. 22,825, or I believe maybe even a little higher. It was 826, it was right around here. So this is where the short signature was taken. And now where do I target my stop? Well, with the candle to unicorn entry, as well as the equilibrium entry, which is the point of this video, when you enter on a candle to unicorn, you typically put your stop about 1 or 2 points above a breaker block in the case that we wick, like this example here. Or with this example, what we can do is we can actually utilize the candle EQ, the previous candle EQ here, for a potential signature. So I had entered the trade on this candlestick here, and I put my stop at the wick high of the previous 5-minute candlestick, being that 8 a.m. to 8:05 a.m. candlestick. And so my short signature was actually taken here, and then I target a 2-to-1 risk to reward ratio, as I do with every single one of my trades. But here was the difference, right? The reason why I targeted more than this 2-to-1 risk to reward is because we had so many draws on liquidity at these lows. We had Monday New York PM session low, this hourly breaker, and we also had the new weekly opening gap that had not quite gotten filled yet. And so this gave me a lot of bearish bias to take this trade and target these New York PM session lows from Monday. And so here was a trade that was aligned with about a 5.4, I believe was exactly the R that I had made from this trade. And so this was where the entry model was taken. To reiterate once again for all of you in this video, what did we see happen? Well, the 6 a.m. candle formed a high. The 7 o'clock swept the high of the previous hour, being the 6 a.m. candlestick, and formed a change in state of delivery. And so if we see a candle body closure below this change in state of delivery, this validates a short position. And then we also saw this 5-minute breaker block form, which forms the fractal, which changes the fractal model into a candle to unicorn setup. So as I mentioned before, the short position was taken. We'll just, for the case of this video, make our entry around 826. My stop loss goes at the high of the candlestick that retested that breaker, aka that swing, not really the swing point, but the high of that candlestick. And then my TP down at that New York PM session low. So it's not obviously playing out right now, but that was the general entry model for this trade, targeting that Monday New York PM session low, since that was an area of high interest liquidity where we could see liquidity pooling and waiting to go down to. And so now we will play this trade out here. We respect the previous hourly EQ. So I took my entry on the respect of that EQ, utilizing a proper stop loss management with the high of the candlestick that had also tested the EQ. So I risked 7.5 points on NASDAQ for the chance to make 44.75 on this trade. And now we'll let this play out a little bit and you'll see what happens with NASDAQ here. NASDAQ ended up sweeping that Monday New York PM session high or low. And then if we see here, we actually ended up rejecting back above it, but we also rejected off of the hourly breaker block that I had put below. And so we had tested the lows of that liquidity. And so I was actually anticipating to look for a long position here, but this was an A+ short signature on this NASDAQ trade. So this, in my eyes, even though I did not take an entry off of the original candle to unicorn, which I typically do, I was not active on the charts on that minute and so missed my original. And so I utilized the equilibrium to help me catch that continuation leg lower. As you see, even though I missed that original closure, I actually got an even better fill than the original closure, that 5-minute closure below this breaker, because we retested the equilibrium of the 7 o'clock hourly candle, respected it, and then continued lower. So this in my eyes was an A+ short signature with this trade on NASDAQ, yielding a beautiful 43-point trade. And other than that, I hope you guys enjoyed the video. I will make sure I make more recaps like this one, and I will catch you all in the very, very next one. I'll see you all soon. Thank you all so much for watching. Bye now.